Good morning or good afternoon, depending on where you're at in the world. How's everybody doing? Good morning, Brenda. No, the cat's not here yet. I'm sure she'll come at some point. You'll see her. Probably get up there on the router. It's a little bit chilly this morning. It's been in the 90s here the last couple of days, so it's a little toasty for me. I don't like the heat that much, so anybody that's in Texas or Arizona or Florida, yeah, people say you adapt to it, but I've spent some time in all those places and I just can't do it. So, but it's a dry heat. So is my oven. I never crawl in there. Hey, Kevin. What's up, Will? Haven't seen you for a while, Will. Been a little bit. So, morning, Helen. Well, welcome out to Trading Coaches Playbook. If you're new here, welcome. If you're not new here, welcome. Let's get the disclaimer out of the way so we can get into a little bit of fun. I am not a registered broker-dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. Kentucky, isn't it hot there? You guys get pretty dry and hot there, don't you? It's been a long time since I've been to Kentucky, but yeah, I don't have AC. I only have the God-given AC. You just open the windows at night and let it get cold, and then shut them down in the morning and close everything down. That's the way I grew up, so I'm used to it. But my neighbors do. So when it's really hot, I always offer like, hey, I'm going to cook some meat. I'll bring it over just so I can get the AC for a while. But yeah. Yeah. That's the thing. I mean, out here, we don't get, we have 80, 90 degree weather for maybe 2 or 3 weeks in the summer is a normal summer. We might have, a few days of 100 degrees. So it's not really, AC out here is nice when it's hot, but it's so rarely that hot that it's really necessary. So it's one of those things I'm not clamoring to get it because it's not that big of a deal to me. So, and it's good to sweat it out once in a while, right? I mean, you go into the sauna for a reason. So yeah, you don't even need a sauna out there, huh? You got one in the summertime. You get 2 or 3 months a year. You just sit out there and that makes up for the other 8 or 9, huh? So here's what's coming up at Wealth Builders. Inner Circle is June 10th and July. We're not in June anymore. June was kind of a boring month. So hopefully July will be a little more exciting, but we'll see. So July 10th and July 17th for Inner Circle. Wealth of Spreads, July 10th at 8 p.m. And then Mastermind Group, July 11th, July 18th. Monster Market Movers are just July 12th. Wow, those are all packed into just a couple of days. And then Weekly Whispers with yours truly on the 13th. So pretty much one every day almost, which is the way we like to do it. Just keep on trucking. Power Options Place is Tuesday and Saturday. Cover Call Explorers on Thursday. And then free online workshops, Power Hour every Monday at noon. Trading Coaches Playbook, this one every Friday morning, or Friday at noon Eastern time. I'm on the West Coast, so it's only 9 o'clock for me. That's why I'm still drinking coffee. Of course, it can be noon and I'd still be drinking coffee probably. So Question Trading in 2 hours, July 12th. And then E-Mini Think Tank with Brandon Monday, Wednesdays, and Thursdays. Vegas Spread Mastery with Sean Monday, Tuesday, and Friday. So that is what we've got going on here in the very near future. A lot of these are fairly regular. So, and then of course you can find us on all the social media outlets and follow us there. And then yours truly, if we haven't met, then my name's Tony. I've got Patterns in Flash, which is a training tool for technical analysis, charting, learning to recognize patterns. The original concept was flashcards, right? Because in the old days, when I was a kid, at least being the son of a teacher, my mom we all use flashcards. Pretty much everybody has, right? It's what you used to learn and study. It's a repetition thing. And when I first started back in 2000, I was frustrated because I was reading books about patterns. I was learning. I'd see patterns, but I'd see them in the chart from 6 months ago. And I was flustered because there's a great trading opportunity there based on the pattern. What I just read in the book, there's a head and shoulders, and this is what it's supposed to do. And that's exactly what it did. And it was 6 months ago. It's already played out beautifully. So I got frustrated because I wasn't seeing them on the right side of the chart, which is where you have to see them. If you don't recognize it on the right side of the chart, you see it 3 months or 6 months or even 2 weeks ago sometimes. It's too late, right? So I created flashcards for myself to train my eyes to see the patterns so I would recognize them as they were developing on the right side of the chart. And from that, the whole thing just kind of blew up into what it is today, because I showed it to a few people. I gave it to a few people like, hey, can I have that? Can I have that? And next thing you know, it's a full-fledged tool with the flashcards, and there's about 8 hours of video all about the technicals, about how to read charts. There's foundational stuff. So if you're brand new, it's perfect. There's a lot of advanced stuff in there too. So if you're not brand new, it's perfect. Anywhere you're at. And there's always little nuggets, right? And some of you have been around for a long time, and you still come back to these. And I still go back to classes. I still go watch Sean and Rob, and I watch everybody I can, because there's always a little nugget. You know, you get to a point where the learning kind of slows down, but then somebody says something a certain way and you go, oh, just a little different perspective, right? So even though the learning process decelerates, there's still little nuggets out there that you pick up on. So, oh, awesome. Thanks, Trip. So Trip said there's no Vegas spread mastery on the 14th and 17th. So, and there should have been an email sent out to you. So apparently Sean's taking a vacation. How come I don't get a vacation? I'm just kidding. We're not, we create our own vacation. So I've kind of been on vacation the last couple of weeks, at least from trading. It's been, the market's a little bit wonky. And so I've been taking it very easy. I've only got a couple on, so just a few. But after yesterday, that may have changed. We'll get there in a bit. So Weekly Whispers we launched this year, which essentially, if you don't know my trading style, I've got a filter I use that usually brings me about 300 stocks every week. I just do it once a week. I filter through them. I look through them, go back to patterns of flash, right? Recognizing patterns. I just flag the ones I see a pattern on, put them into a list. And then I go through those a little more in depth, right? The first pass through is just flagging, just quick. You know, it literally takes 300 stocks, takes 5 to 10 minutes, maybe 15 if I'm slacking. So it's not a lot of people say 300, that's crazy. When you're just flipping through and you've trained your eyes to see them, it's quick. But then I take the ones that I found and I filter those down to the best of the best. Sometimes it's like, okay, that one, I don't know what I saw there, but, and then I take ones like, okay, that's not that good of a pattern. This doesn't work, or that doesn't work. So I only keep basically the cream of the crop. And most weeks I have 20 to 30 candidates. And so we decided, you know what, I'm doing this already, right? So I just put it in the video. It's usually about an hour long. I'm basically going through all my analysis. We look at the news, we look at the overall markets, we review what happened last week, and then we look at the candidates for this upcoming week that looking to trade. I have plans set up on them. Here's my trading plan. Here's the pattern. Here's the strength. Here's the weakness. Here's what I would be considering. So, and we'll touch on that in a little bit. I'm going to go through the PowerPoint, some of the information, and then we'll spend probably the last half of this class, if not more, just looking at charts. So if there's certain stocks you want me to analyze and look at, obviously I can't give you advice or tell you what you should or shouldn't do, but we can analyze the charts together and look at it. And I can say, this is what, I would consider. So the small accounts, big return is a class I did. It's a 2-hour class I did, I don't know, a little while back. It's recorded though. You can go watch it. So if you're working with a smaller amount of money, then this is a good thing, because there's a lot of different things, little tweaks you can do that, because it's I don't know if I'd say it's a little more challenging. It can be, depends on how you define small, right? Everybody defines small differently. For some people, $250,000 account is small. For some people, 250 is small, $250, right? So it just depends on where you're at. Everybody's in a different place. But I give you some strategies and techniques and ideas to work with that small account. And one thing when I was recording the Weekly Whispers last night is, don't fall into the trap of thinking that if you had more money, you would trade better. That's the furthest thing from the truth. When I started, I scrounged up $1,000. I was young and dumb, and I had just left the job. And so I scrounged up $1,000. I remember thinking, if I had 50 grand, I'd make a fortune. I would have just lost it. Just like I lost $1,000, right? That's why I tell people, I don't care how much you're starting with, if you have a bigger chunk of money, then take a small portion of it, 5-10% of it, and use that for learning capital, because you're going to make mistakes. You're going to do stupid stuff. You can paper trade all day long, but the one thing that paper trading will never, ever give you is the emotional side of trading. You can't understand, you can't fully understand and grasp what you're going to experience once you actually put money in the trade. No, Eric, I didn't. I didn't leave my job to trade. I just I had moved up to Seattle to buy a store from this guy. I went to work for him, running the shop, and then I was supposed to buy it from him. And after about a year, I realized that he wasn't going to sell anytime soon. I had some savings, so I bailed on it, knowing I would find something else. And he knew. I mean, I had a conversation with him one time about selling the place, when he was going to sell, what his plans were. And I think he kind of realized that I was going to leave soon. So it was kind of a mutual thing, like, okay, you're going anyway, so why don't you just go now? And the hilarious thing is, he just sold about a year ago. That was back in 1998. I moved up to the Seattle area, intent to buy this. I'd got into the tire business when I got out of school. And so I was going to buy his tire store from him. But yeah, that was 1998. 1999, I left there, late 1999. And because yeah, I'd been there for a year, and it was just this last year when he finally sold. So I'm glad I didn't stick around. I would have waited for 20 years, over 20 years. So, but it's a blessing in disguise, because then I stumbled across trading. Actually, I was looking for a job, and it didn't take long, but somebody introduced me to a lady that was worked at a seminar company for trading, and that's how I stumbled into it. So they hired me to be a tech, so I started going to the seminar. So I was truly blessed, because I got to learn for free. I got paid to learn, actually. So it was pretty awesome. That was a life-changing deal. So anyway, I like everything outside of Seattle. If you haven't been to Seattle recently, it's if you see the news about San Fran and all the homelessness and all the chaos and craziness in the cities, Seattle's just like that. It's terrible. I don't go down there very much anymore. I never liked going down there much anyway before, but now it's worse. I mean, it's awful. So I met a couple from Texas that bought a condo right above Pike Place, 19th floor. I was there. It was beautiful. You sit out and you look out over the Sound. Great wheels right there. It was just awesome. But the lady said, and this was 2-3 years ago. She said, we came here expecting to have a great time, and we can't even go out at night. They wanted to go explore the city, and there's a lot of good restaurants down there. And like, we can't even go out. You walk around and there's bumps everywhere. I mean, there's people laying on the street and sleeping and defecating, and there's urine everywhere. It smells like urine in the alleys. It's just, she said, it's awful. We just stay inside. So I don't know if they're still there or not, but yeah, it's ugly. It's an ugly situation. So a lot of places are like that. So yeah, Erica, you're not missing anything right now, because it's until they get it cleaned up. Yeah, because and they're doing it right now because the All-Star game's here, apparently, which tells you how much I follow baseball. I didn't even know. Didn't even know they had the All-Star. There's been news stories pop up on my phone, right? It says Seattle's cleaning up all the homeless encampments, and right down by Safeco. Last time I was there, which has been probably a year, driving around there at least, there's just everywhere there's homeless encampments. There's rows of old beat up RVs that are just broken down. They get them and they can't tow them away. They can't legally take them out of there. I don't know what the deal is, but it's a sad situation. So everywhere. So anyway, Toronto's like that too, huh? Yeah, a lot of cities are. I just met a gentleman, what was it, last week or the week before? He's moving to Arkansas or Kentucky or something like that, somewhere in the Midwest. And he said the city bought a big high rise or whatever to put the homeless in. They can go in there, but they have to be clean and sober, right? They can't be high. They can stay there as long as they want, apparently, I guess. And if they choose not to go in there and they're high as a kite on the streets, then they take them to jail. So they keep them off the streets that way. They're either clean and sober and they have a place to stay, or they go to jail. I don't know what else, that's all he said basically. But he said he was surprised at how clean the city is. He expected it to be because he was moving back there. So Yeah, it's that's always the big question, right? What is the cause of it? Why are so many people homeless? And I saw a documentary out here. A guy did it probably 3 or 4 years ago, 5 years ago, called Seattle's Dying. It's on YouTube, and I watched it. I was just curious. Somebody mentioned it to me or something. And the guy was out on the streets interviewing people, and he asked the lady. He said, "How long have you been out here?" She said, "A year, like 5 or 7 years." How many people are on drugs? She said, 100%. Every single one of them people. She said, "I know pretty much everybody on the streets, and every single person is on something." So it's, as far as I'm concerned, it's a drug problem. It's nothing else. And then you give it to them for nothing, and it's being enabled, unfortunately. So sometimes tough love is what's necessary. And I think that's the case in this situation. So, but let's get to the topic of the hour. We're not supposed to be talking about politics anyway. Who started that anyway? I'm gonna blame you, Erica. I'm just kidding. All right, so we're gonna focus on the roots, not the fruits. What does that mean? That means that if the roots aren't there, if they're not solid, they're not deep, then you ain't getting any fruits, right? Profits, in other words, profits. So what does it take when it comes to trading to produce consistent profits? Because that's what we want, right? It's consistency. Anybody else feel like you're on a roller coaster ride sometimes? You're up, you're down, you're up, you're down. You have a good week, a good month, you make a bunch of money, and you give it all back. You're like, woo! Yeah, that's normal, Brenda. It doesn't change. The question is, what's the roller coaster like? Is the roller coaster steadily going up the hill? I mean, you go up a little bit, then you go down a ride, and then you go up. And as long as it's climbing like this, right? Even though you have the ups and downs, that's okay. We want our accounts to look like a nice solid uptrend in the stock. That's the ultimate goal, right? And you get the crazy ones that go boom, way up, and then they crash. That's not good. Okay. It's not good for a stock. I mean, unless you're on the downside, of course. But you don't want your account to look like that either. You want a nice, steady climb, right? And part of it will depend on, what type of strategy you pick, but picking the right strategy, pick the right stock, pick the right direction, being right a majority of the time. Nope. Trading isn't about being right. That is, if there's nothing else you take away from today, that's the key right there. Trading is not about being right. If you are focused on being right and trying to be right more often than you're wrong, or even just right, period, at all, you're focused on the wrong thing. You're focused on fruits and not roots. The fruits don't come from being right. The fruits come from probability and odds, right? It comes from having the proper mindset and managing your emotions well. That's why I said, if you are new to trading, if you haven't funded trades yet, if you're only practice trading, then when you put money into it, you're going to get a rude awakening, because everybody has this experience, and I did too. If you don't know me, I teach from experience. So if I mention something like this, you'll go through this, you'll go through that. It's because I've done it, right? I remember taking like $5,000 and turned it into, I think, 30 grand in about 2 months on paper. And then you put real money in, and it's a whole different ballgame. And I think that I think Steve Nissen put it best. He's the candlestick guy. If you haven't read his books, he said, once you fund a trade, you're no longer in the driver's seat. You're merely a passenger. And I think that is the best way to put it, because when you sit behind the wheel of your car, you're in control, right? And you're driving, and you know what's going on, and you've learned to react to certain situations. But in trading, you think you're in the driver's seat. You want to be in the driver's seat. But the second you put money into it, you're now sitting in the other side, and the market is driving. The market is in the driver's seat, not you. Or the stock, or whatever's going on, that's what's driving. You're not driving anything. You're just sitting there watching. So you've got to know how to handle that when you're just in the passenger seat and you have no control over what happens in the wheel. I mean, this thing could go off the rails, right? The steering wheel could just turn and, send you off a cliff, right? And that's no fun. So it's not a good place to be. Yeah, dancing with a gorilla. That's another way to put it. Yeah, there's a lot of different ways you could phrase that. Use what works for you. That's what I say. Yeah, paper trading always works out better. You know why? Because you just hang on. You don't stop out. And then sometimes it turns around and works out in your favor. But yeah. Yeah, paper trading it's great to learn the mechanics, especially if you're learning options and how options move relative to a stock and how things react, especially with different strategies. If you like spreads, right? The first thing is we'll hit each of these and then we'll go to the chart. So yeah, we'll have a good 25, 30 minutes for charts, but this is crazy. What's up with the V bottom? I'm just looking at that. Apple and Tesla were both selling off with some pretty heavy volume an hour and a half ago, and they both completely reversed, and Apple's now at a high and Tesla's at its previous high. Crazy. Anyway, so choosing an appropriate strategy is important, right? I am a directional trader. I trade patterns. I look for patterns. I trade the breakouts of the pattern. When I find a pattern, a head and shoulders, a triangle, flag, pennant, double tops, lots of double tops this week, which was nice to see, but we'll get there. And then I'm buying calls or buying puts. I occasionally will do a spread, but they're pretty rare for me. Spreads are a little more mellow. They're more, what's the word I'm looking for? I don't know if I wouldn't say risk averse, because there's just as much, if not more, risk with spreads than there are directional strategies. It's all about perspective, right? But some people like that slower, more mellow situation. So, and that's what is attractive about spreads. It's just not my style. So it's one of those things that there's less volatility, typically speaking, right? Where, I might have a month where I crush it, up 30, 40, 50 grand. And the next month you give back 30 or 40 grand. You're only up a little bit, over 2 months. You crush it 1 month and then give back 80 or 90% of your profits. And it's like, that's why as long as you keep it going, right? As long as you keep a nice little uptrend going, then things are okay. But it is important. We all have different personalities. You all have different capital you're working with, different risk tolerances. So it is important to pick a strategy. If you can't handle the large swings of directional trading, then yeah, maybe covered calls or spreads is better for you. So it all depends on where you're at from an emotional perspective, right? But that second bullet point there on the list of 5 is probability. This is where going back to being right does not matter in the market. You're going to be wrong more often than you're right. The question is, will you manage it well or not? Because being right doesn't matter. Do professional baseball players come out and say, oh man, I only got to hit 30% of the time. I was wrong 70% of the time. No, they know that's what the odds are, right? They know that, 25, 30% of the time they're going to get a base hit. The other 70 or 75% of the time, they're going to walk, they're going to strike out, they're going to fly out, they're going to ground out. They're going to do something other than get a base hit 70 to 75% of the time. Yet they're professionals. They're the best in the business. And trading's no different. You don't have to be right that often. And some people, I don't know, maybe some of you have seen it, maybe you still haven't, but if you look at risk reward, okay, and you see it, most of you I know have seen it, but if you use a 3-to-1 risk reward ratio or higher, then realistically, you only have to be right. On a 3-to-1 risk reward ratio, you only have to be right about 28 to 30% of the time to still come out profitably. Now, some of you are scratching your head, you're going, that doesn't make any sense. Because when I started, I remember thinking, man, if I could just be right 70% of the time, I'll make a fortune. There's people that still believe that you have to be right at least half the time. If you're not right more than you're wrong, then you're not going to make money. And nothing could be further from the truth. Let me just give you simple math. And if you haven't seen it, okay, if you have $3 of upside profit potential and you have $1 of risk, if you have one trade, let's say, just say you do 4 trades, right? 4 trades. So you can see my fingers with a little camouflage. You do 4 different trades, and 3 of those trades go against you and you lose $1. One of those trades goes in your favor and you make $3. You lost $1 3 times. That's $3. You made a profit once for $3. You got $3 of profits, $3 of loss. That's break even. Yet you were only right 1 out of 4 times. That's 25%. You got one base hit out of 4 at-bats. 25%, and you're still break even. So what happens if 2 go in your favor and 2 go against you? You lost $2 and you made 6. You're up $4 and your batting average is 50-50. What if you're only at 30%? Say you do 10 trades and 7 go against you and 3 go in your favor. You lose $7 on $1 each. You got 3 trades that went in your favor at $3 a piece. That's $9. $9 of profit, $7 of loss. That's $2 net profit, and your batting average is 30%. I can't tell you how many times I will say that. I didn't put it in here, but I have a little thing. I show it, the numbers, and it's 28.5%. You're coming out $1 ahead. It's just simple math. Trading is about odds. When you learn first to analyze the chart and determine if it's strong, it's weak, what might happen next, right? You learn to recognize the odds. Say the odds of this thing going up are higher than going down. The odds are that it's going sideways. The odds are it's going down. And then you put yourself in position to take advantage of the odds. But the next bullet point there stops, right? You've got to preserve your capital and be prepared for opportunities that move in your favor, right? If you put a bunch of money into one trade and it wipes out 80% of your capital, you're kind of in a bad position. If you only lose 20% of it, then you still have 80% less. So you've got to put the odds on your side, and then you've got to trade with the odds in your favor. And you've got to have the stop in place so that if it goes against you, you get your cash back, and then you go you find another trade that has odds in your favor and put your money at risk there, because eventually one of them is going to hit. Whether you've picked right or you've got the perfect stock or the perfect this, eventually one of them is going to move and do what you thought it would, right? And let's just say it's 1 out of 5. Okay, so you have 1 out of 5, and let's just stick with the 3-to-1, right? You did 4 trades. 4 trades went against you. You lost $4. 1 trade goes in your favor. You make 3. You're only down $1. Yeah, you're only 20% accurate, right? You had 1 trade go in your favor, but net profit wise, you're only down $1, which is, not huge, right? Unless you put your whole account on the line, which is foolish. So you can see that, the risk reward, which again is the next bullet point, is that when you implement risk reward, that is one of the biggest things. If you haven't done it yet, that is one of the biggest things that will dramatically change the way you trade. It will dramatically change how you manage your emotions. And it's a little bit different for spreads, okay? Because obviously it's a different strategy and it has a different risk reward profile. So the risk reward I'm talking about here is with regard to directional trading. Whether you're buying stocks or options, doesn't matter. It's directional. Spreads have the advantage to spreads is that you walk into it with about a 70% chance of profitability, right? Especially if you're doing a slightly out of the money, say a bull put spread. You're going slightly out of the money. The stock doesn't have to go up. It can stay sideways. Stock goes up, stock goes sideways. You got 2 out of 3 directions, you're going to end up profitable. And if it drops down a little bit and it stays above your strike price, you're still profitable, right? So you got 66 is 2/3, 2 out of 3. So you're a little bit better than 66% chance of profitability, right? So spreads are a good strategy from that perspective. The one thing I don't love about spreads, if you have a $5 spread and you get a $1 credit, yeah, you got a 25% rate of return. But if you do 5 of those and 4 of them go in your favor and 1 goes against you, you're break even. So you have to be right about 80% of the time just to break even. That's the one thing I don't love about spreads. I think in the right situation, spreads are spectacular, but that's just me. So, and there's ways, and that's the beauty of trading, is that there's lots of different ways to structure the business and do it. I know Brandon does a ton of spreads, and the way he does it is awesome. He's hugely profitable, right? So it just depends. And you really got to figure out what works for you. And that's kind of the tricky part of trading, right? Because most people come in and, well, just show me what to do. Well, where are you at? Where are you at mentally? Where are you at emotionally? Where are you at knowledge-wise? How much do you know? There's so many variables. It's impossible to just say, here's your package. This is what you need to do. It's one of those things you just have to figure it out for yourself. So, but once you get the foundation and the basics down, then you can determine what's what, right? Excuse me. And the last thing there is scaling. Okay? If you trade directionally, If you're scared to trade directionally, then first of all, if you implement risk reward, that will dramatically reduce your fear. It's not going to eliminate, nothing's going to eliminate your fear. Right? That's never going to happen. It's just not realistic. Whenever I see somebody post something, oh, trade without fear, I just start laughing now. Like, whatever. It's just not realistic. As I say, live life without fear. I mean, if you have kids, if you have a spouse, if you have anybody in your life that you love, then you're probably afraid that something's going to happen to them and they're going to be gone from your life, right? That's a real fear. It happens, right? So, and you can't just eliminate that from life. You say, well, okay, they're going to die. Everybody's going to die. So who cares? Why would you be afraid of it? Well, it's the nature of the beast. We don't want to lose the people we love. So it's a natural fear there. And we were given fear for a reason, lots of good reasons. And the key to trading is you got to learn to harness the fear and use it to your advantage. If fear controls you, then in the end, you're going to lose. If you learn to control and manage your fear, then you'll be just fine. And risk reward is a huge thing that will do that. And my experience was just that. I went and looked, now looking back, I realized I was winging it. I didn't think I was winging it. And then when I realized the risk reward thing, I said, okay, why am I not using this? And so what I did is I implemented it on some of my trades. And so one day I'm sitting here going, here's these trades over here that I don't have a risk reward in play. These ones over here, I do. These ones over here, I wasn't concerned about at all. I think I had like 3 or 4 on. Like, I don't even care what happens to them. All I have to do is have one of them go in my favor. And I'm coming ahead. Any one of those trades that I have over here works out and hits the target, and the other ones stop out, I'm still coming out ahead. I'm not worried about it. These ones over here, I'm still nervous and anxious about. So if you haven't implemented that in your trading, do it and watch your fear factor go dramatically down on this side when you have the risk reward in there. Because that's all you have to do is look and say, so what? I got 5 trades on. If 2 of them work out, I'm golden. So I don't just move. I don't care what you do. Hit the stop, hit the target, just hit one of them. And are you going to have times where 5 go against you? Yeah. Then the next time you might have 4 out of the 5 go in your favor and you make a killing, right? So it's all about odds. But scaling is another thing. If you're scared of the directional trading, first implement risk reward and then scale. And this is where I go back to probability. Say, okay, what are the odds of XYZ happening next? What are the odds of this stock going up versus this stock going down or going sideways? Okay, well, it looks like based on the pattern, based on the analysis, it looks like the odds are stock's going higher. Okay, well, I want to buy calls, but I'm scared to buy calls. Okay, well, do you have a risk reward in place? Yes, I do. Okay, I think the odds are that the stock's going up. I've got a risk reward plan in place where I have 3 times upside for my risk, but I'm still scared. Just buy 1 contract. Maybe 2. Maybe you just stick your toe in the water, right? How many of you go to a strange pool or a strange body of water, you just dive in without checking the depth or checking the water temperature, right? You stick your toe in the water. But we come to trading and all we can see, you go to this nice, beautiful, body of water thinking, oh, I'm just going to dive in. It looks warm. It's warm outside. You dive in, it's freezing, right? It's 30 degrees. You're like, which is actually good for you. But, you get shocked. People come to trading to do that. They think they're going to make a fortune and they just go hog wild, like throw everything in there. But if that fear grips you, then learn to dip your toe in the water. Just do a little bit here, a little bit there. And then as time goes, you get more and more comfortable with it, right? And sometimes, I just dip my toe in the water and pick up 1 or 2 contracts here. And then if it keeps moving in my favor, I'll add to it. And then I add to it again. And then I'll peel it out, scale out as well, right? Just scale in and scale out. Scale it out's easy. Right? That's something, you go all in with 10 contracts and you take half of them. If you get halfway to the target, you bank some profit, which reduces your risk. Now you have less risk. But scaling in will do the same thing. When you feel that fear, just pull back a little bit and say, okay, I'm just going to do 1 or 2 contracts. I'm just going to put a little bit of risk. Set my stop and walk away and let it do its thing. Make sense? Any questions on any of that? I'll let you throw those in there before or while I go over to the chart. So we'll play for the next 25 minutes. Here's something that I do want to touch on first. And for $1 million, we could look at NVIDIA. Just kidding. Yesterday was the first time, and for those that have weekly whispers, you'll hear this again. Yesterday was the first time in quite some time, probably 6, maybe 8 or 9 months even, if not longer, that all the markets essentially behaved the same way. And when I went through my list, because what is common in normal markets is that if the market itself is in a pattern, then that pattern will show up. It'll be very prominent in the list of, I usually have around 300 stocks that pop through in my filter. And that pattern will typically be very prominent. If there's a symmetrical triangle in maybe the SPX, then I'll find a bunch of stocks that are also in symmetrical triangles. But I haven't seen that for a long time. It's very sporadic. There's just, there's 1 or 2 of this pattern. There's maybe a handful of this pattern, but there's not really a prominent pattern until yesterday. And which to me was kind of nice, because I've been, for the last 2 or 3 weeks, I've been kind of just on the sidelines, like, this market's just kind of wonky, and I think it's overextended, and who knows? People are saying it's a new bull market, and I'm like, I don't think so. The underlying data, the backdrop of the market, the macro data just doesn't support that. And there's the old saying, for the bears, the bulls always tell the bears, right, is the market can stay irrational longer than you can stay liquid. So if you are a bear, like which I have been for a couple of years, and that doesn't mean I don't trade the upside. I still take advantage of if there's a pattern that has a potential bullish move, I'm going to jump on it. But I've traded on the last 2.5 years, I've traded significantly more to the downside than the upside. But yesterday was the first time where all the markets basically traded in tandem. We on all 4, the NASDAQ, the SPX, the Russell, and the Dow, all 4 of them have formed a double top. Yeah, the market is always crazy. It's a question of degree. How crazy is it, right? So we all know the crazy person, right? The question is, how far gone are they? Are they way out in left field, or are they just like moderately crazy? Because I think I might be a little bit crazy, but I don't know. But there's something happened that is also very, very rare. Some of you maybe have been out on this, if there's a big body of water and there's this little small chunk of land sitting out there in the middle of the water. What do we call that again? An island, right? And that is essentially what we got here. This is the SPX. Yeah, island reversal, gap island reversal, whatever you want to call it. But yeah, island reversal is the technical name for it, where there's no trading right here. So you have a few days, sometimes a few weeks of this trading activity that sits out on an island, and there's a big moat right there, right? And this is not a very big moat. That's the SPX. We look at the Dow, and there's the moat right there. There's no trading between these days. You got these 3 days just sitting out there all by themselves. That's a 75, 80 point moat, which is significant. Island reversals are very rare, and they are a huge, huge bearish indication. Now, does that mean that they're going to play out? Not 100%. In fact, I don't know what's going on with the market right now, but it's rallying for some reason. Just in the last 10 minutes, it's taken off. I don't know why. I'm assuming there's some kind of news out there, but somebody got excited about something, or it's algo's buying, but yeah, I don't know what the deal is. But that's the hard part too. So it's talking about a crazy market. Is sometimes you get this, you get algorithmic buying, and then by the end of the day, the things turn around and tanked back down to where it started, or even worse. Nice, Brenda. Just remember that I get my cut, because I'm sure you saw what I was doing here, and that no, I'm just kidding. But yeah, this is a big deal. And there's the Dow, the NASDAQ. Well, actually, oh, that's interesting. This is bringing us into today. NASDAQ is today. So the gap's been filled. So now the island reversal is to a certain degree negated as of right now. That's about right. So this is streaming, but it's not real time. The time it's 15 minutes delayed. So this is where the NASDAQ was 15 minutes ago, which it's at 13,779 right now. So it's up another 24 points from there. Which you got a little hammer pattern, but a little tiny moat here on the SPX or the NASDAQ. But on the NASDAQ, the Dow, and the SPX all had island reversals, which, yeah, that's not updating. The NASDAQ does. The Russell does. No island reversal on that. But here's the other thing. Watch this. Double top. Kind of a double top, but the high is a little higher, so it's not really technically a double top. The Dow, beautiful double top. NASDAQ, pretty nice looking double top. A little tiny bit higher, but not much. So we have all four major indexes double topping. 3 of them have an island reversal. And I don't know what happened there. So it was interesting to see. And then probably, well, let me just jump over there real quick. July 6th. Holy cow, that thing took off. Should have jumped on it. How do you know, right? What is going on? How come this thing's not? There we go. There's a nice head and shoulders. These are all the weekly whispers for this week. There's APO. I'm just curious how many of these were actually. I was going to flag them before. It was kind of a double top. It is a double top, double top. I'm just looking real quick to see. These are all the ones that I looked at. It's the head and shoulders, COP, head and shoulders, kind of not real pretty, but some of these are not that spectacular looking, but you never know. Sometimes there's patterns that are good and other times they're not. And head and shoulder, Las Vegas Sands, beautiful head and shoulders on Las Vegas Sands that broke big time yesterday. There's a double top, double top. Starbucks breaking down. I like that. Little miniature head and shoulders, double top. So that is 13 out of the 33 are double top patterns. Which in normal markets, that's what you get when the overall market is all doing one thing, because the major markets typically trade in tandem, right? If they're all trending, they're all going the same direction, they're all doing the same thing. If they form a pattern, a lot of them are forming the same patterns because the market's kind of all in sync. So now we've got a bearish reversal pattern going on with all 4 major markets, and 13 out of 33, almost half of the stocks that the cream of the crop, the best of the best patterns are double tops. So that's normal. I haven't seen that in a long time, several months at least. So it's interesting. I got kind of weirdly excited because I'm like, okay, maybe we're back in a normal market. Maybe this thing's just going to do what it's supposed to do, which would be go down. Wow, it's crazy. I don't know what news is driving this thing. All right, let's look at okay, Brandon, SPY's cuter, and the Qs are going to be quick because that's basically the same as the SPX, right? You can see that looks almost identical to the SPX. I wouldn't be bullish on this thing until or if it breaks above the highs. So I don't, hard to say if it will, it might, could keep rallying, but I wouldn't do anything with it until it makes a new high. And even then, I would be very skittish on the bullish stuff myself, but that's because I'm not bullish. Look at the macro data, the big economic data, and sure, we get maybe 1 or 2 days of pop. You know, unemployment data came out today, and the market likes it a little bit, looks like. But I don't know what's going on here. Thing is slowing down. I don't know what is happening. All right, well, we're going to wait for that. I'll just pull this down here then. And we'll use TOS to look at stuff. It's not as easy. In fact, I'll just bring this up. Did that thing start? Nope. Yeah, it's I'm just going to close it. We'll start over. Where did that go? There we go. So there's Amazon. I really only use this for intraday charts for the most part. I mean, or looking at things, so I don't, as far as drawing stuff, it's a lot harder for me to use, but. And it's another, I mean, Amazon, you can see obviously has rallied a bunch. How will it stay up here? There's not anything. I was looking at this and I'm going, well, I would expect this to pull back, but there's not really any prominent pattern here that tells me now's the time to get into this thing. You got a huge bearish engulfing pattern right there, right? And then you've got some long upper shadows. You've got a little spinning top there, a little Harami pattern, spinning top the following day. It's not a bearish engulfing pattern, but kind of close. You got a long upper shadow and close on the low. You got a whole bunch of days right here. They're all dojis. The last week and a half, 2 weeks have all been really small bodies. It's indecision. Market doesn't know what it wants to do, or the Amazon, I should say, not the market, but Amazon's just kind of like can't figure out where it's going. But I don't see anything. And I was tempted because I'm seeing some of these long shadows, which are obviously bearish because the bulls push it up here to the high. By the end of the day, the bears have it way back down. So there's some bearishness to it. But what else is there right there that says now's the time to get in? Now's the time to pull the trigger. And there's really nothing there that I can see. So let's see if we're going to work here. Okay. Maybe I should have left the streaming part off, but okay, there's Amazon. So yeah, I mean, I would expect Amazon to pull back, but there's also a decent chance that it just goes sideways for a little bit too and doesn't have a big sell-off. So from an odds perspective, without anything significant here to say now's the time to pull the trigger on a downside, I just stay out. I just don't mess with it if it's something like that. Unless there's a clear, concise pattern where I can look at it and say, okay, here's what, based on the pattern, based on this analysis, it doesn't have to be a pattern, but it could just be basic analysis, right? Based on that, then it makes sense to go. The odds are that it's going to go down from here. NVIDIA, this is kind of the same. There's not much here that says it's time to go bearish or it's time to go bullish. I mean, you got obviously a massive run, which I'm not really a fan of NVIDIA anymore because, well, this is going to happen. I've been at this, 23 years now. You're going to miss stuff. But see, the cranky part is that I didn't miss this. I saw it, right? There's an inverted head and shoulders. And I think actually I showed it. No, this was before we officially launched the Weekly Whispers, but I remember starting to do it just to get comfortable with it. I mean, not that I haven't done this a bunch, but okay, I'm going to start doing this. So there's your inverted head and shoulders. I remember seeing it break out. And I'm like, break out really hard. I expected to pull back a little bit, and it never did. And just kept on going. So there's one reason I love patterns. But at the same time, you've got to jump on it and trust that the pattern, you don't know if it's going to play out, right? Sometimes they don't. Sometimes it's a false breakout. So this is one I missed. But there's a lot that I've caught too. So even though this makes me cranky, I got to remember, and this goes back to the mindset thing I talked about earlier. You've got to remind yourself that, yeah, you missed it and it's frustrating because, it was a 180, 190 entry point. Now it's at 430. But would you have hung on the whole time? Would you have stayed in the trade? Because you're probably not buying 6 months worth of time. And if it goes from 180 to 280, are you really going to hang on? It's really easy to go back and say, oh, I would have made a fortune. Well, woulda, shoulda, coulda. Going back to Amazon. How do you know if you would have gotten in there? Right. So as far as NVIDIA goes, I mean, and you look at this right here, this to me is pure insanity. This thing was $100 just a year ago. Not even. What's that? 7 months ago, 8 months ago? It was $115. It's now $430. Is NVIDIA's business, what is that? 400%? 300, 400, somewhere in there? Are their profits up 300 or 400%? Are there potential for future profits up 300 or 400%? And maybe they are. I mean, I don't dig into the fundamentals because I don't worry about it. It's one of those things. I'm trading short term. So what happens long term, I'm not concerned about. But is it justifiable? Maybe. Or is this just people getting excited about things? Remember in 21 when everything was going crazy and Peloton was at $175? I do, because that's about when it broke the head and shoulders. I bought a put on it and absolutely crushed it because I got hammered. It was awesome. That was a head and shoulders I love because I actually caught it. right? And you'll catch them. You're going to miss a lot. You're going to catch some. So you just got to balance it out in your mind. But as far as NVIDIA goes, it's hard for me to see a whole lot more upside. But there's no signal right now saying it's time to get on the downside either. Nothing that says, hey, we're going bearish. So I would say the odds are higher that this thing's just going to go sideways for a while and figure out its footing, unless something happens that changes the course of the market. Earnings start next week. JP Morgan's out next Friday, I believe. So the earnings season could have a dramatic effect on the overall market, depending on what the big companies come out and say and the guidance they give and what they say about the overall economy. So I just think the overall market is a little overextended myself. So I think it's due for a pullback or at least a sideways move, so it can kind of catch its breath. So yeah, I don't see anything on NVIDIA right here that would cause me to go bullish or bearish. So, which, I mean, if you're a spread trader, I don't know that the odds, if you don't believe it's going higher, which in my opinion, I don't think it's going to get too much above there, you can do a 440, 450 spread or something like that. If you expect it to go sideways, that's a good time to do a spread. That's when I would employ a spread, is if I'm expecting it to move sideways. I'm either staying out of the market altogether, or I would do some kind of neutral strategy, right? So, but there's nothing here compelling to me that says go one way or the other. AMD, this one is actually was on the radar. Well, there's pretty decent looking double top, big giant bearish engulfing pattern, and of course that was a catalyst for a big old drop to the downside. It busted the midpoint right here, so it came back up yesterday, and this hasn't updated yet. This is streaming, so it should update to today's candle. I don't know if it's slow or what, but so we came back up, got a nice little roll reversal there at that midpoint, and dropped off yesterday. So what I'm looking for is if it breaks below this point again, then there's about $8 of potential. It's not massive. I mean, on a $100 stock, that's only 6-7%, which is still okay. You're likely to get, 60-70% rate of return on that. I knew it. IBM. Kind of stuck in that range in the middle there. So I don't know. Another thing that if I don't see anything compelling that says now's the time to get in, or now's a good time to at least put a little bit of risk on the table, I don't know what the heck's going on with IBM. There's a support here about 130. There's a little bit of resistance there, 135, and then more 136. So this kind of range. If it breaks above here, then you have the previous high. If it breaks down and breaks this low, we could come down here. It's kind of just in the middle. So I personally wouldn't do anything with it there. Is he going to do it again? All right. Well, while that thing's thinking, I know you guys sent a bunch of messages in. What was the news on Forex Factory? I just saw that message. Yeah, employment came out today, but I didn't think it was that spectacular. But you never know what the market's going to react how it does. It's sometimes just weird and hard to figure out. Micron. I thought I got rid of those. Those are the old school ones. Ugh, I don't know what is up with Omega Charge. I think I just backed it up yesterday. There we go. Yeah, there's a little miniature. I don't like that as a head and shoulders, but it's kind of there. There's that old, we had this ascending triangle. There's a beautiful pattern. Ascending triangle played out pretty much money. I think there was earnings in there though. No, maybe not. This is why I love patterns. Here's another example. It breaks out here, dances on it a couple of days, and then boom, takes off. So there's a pattern that played out well. But we've got that little, short-term trend that's in play, but it's broken back below there. The next level from there is, that's about it, right about there, right about 52, 53. Unless it holds that line. I mean, if it takes off and moves to the other, there we go. We finally updated. So that is today's candle. If it moves back above that and then gets above this 64, I'd maybe be bullish, cautiously bullish. But yeah, I'm not too much there. Micro, I'm trying to make sure I didn't miss any of you guys. I want to get nice, Brenda. Just saw your timing, a little over an hour. I'm right with you, Erica. I just saw you know, I'm catching up here. Due to crypto mining. I must have missed something. Whoops. Oh, no. Yeah. Apple, this is another one that nice trend, just steadily moving higher. Would I get bullish on this? Probably not, because I think the odds are higher. After a move like this, the odds are higher of a pullback than it continuing to run. I mean, I know we say trends continue, and they do for the most part. If this thing pulled back to the trend line and then bounced, maybe see if it takes no move to the upside. If you're talking short term, right? If you're talking long term, you know, it depends on where you're at and what you're looking to do. But I don't get excited about these right here because it's moved so far that, like I say, if any one bad piece of news, this thing's getting hammered. But it could keep marching north too. It's been doing that for months. So, and I've missed a lot of trades like this because like, it's too far, and then they keep going. But again, for me, this is all about odds. I look at this and go, the odds of it continuing to go higher, especially where it's at right now, because it is a ways away from that trend line, right? And you know, if you ever get into regression trading, when something goes too far away from the mean, it has the tendency to regress back to the mean, right? It always kind of stays in the where it's what it's used to, right? You stays in your comfort zone. I mean, that's what we do as humans, right? We get in our comfort zone. That's why so many lottery winners go broke in 2 years. Here's your comfort zone financially. Oh my gosh, I got $100 million in the bank. You're out so far outside of your comfort zone, you always come back to the norm. And stocks are no different, right? So when they get too extended, too far away, NVIDIA is a perfect example. That's so far outside of its mean, it's crazy. And that's one of the reasons I wouldn't be excited about the upside. And will it keep going? Possibly. Have I missed a lot of big trades like that? I know I have. But at the same time, the odds are that it's not going to keep running. It's either going to sell down, slow down for a while, which then I can maybe justify, right? If it settles down and creates maybe a triangle or some pattern that gives it a resting time, then that's different. And I don't see anything here with Apple. There's no compelling pattern, no indication right here that we're going to head lower. So yeah, could it continue to march north? Yes, but this thing could get blitzed at any moment and get hammered for 2 or 3 days too. Because eventually people that bought in down here at 125, 140, and even here at 160, 170, 180 are going to start going, you know what? I've got a healthy profit. I'm going to get out. And they maybe moving their stops up, right? They move their stops up, they trail them up. And as soon as it starts hitting all those stops, the selling accelerates, right? You just put yourself in the shoes of somebody else. If you bought down here at 125, just, you know, in January, 6, 7, 8 months ago, and now you're almost double, you're probably going to start taking profits at some point. And that's one of the beauties of patterns, is what you can see with the patterns is because the big money, right? Especially something like Apple, big money is trading Apple. If you think these hedge funds and mutual funds that bought 1 million shares down here, they're not looking at it going, hey, I've got 70, 80, $100 million of profit. They're going to start to bank some of it. They're going to start to peel out some of it and take profits. That's what creates the kind of topping patterns. Is they're getting out, and then you got people coming in buying the dip, and then they go up. You know what I mean? So I think so. Yes, that is a good point, Erica. That speaks to breadth. And one thing that has been lacking in this market is breadth. You've got the overall markets, the SPX and the NASDAQ have been rallying. NVIDIA, Erica says both NVIDIA and Apple control the movement in the NASDAQ. I wouldn't say they control the movement, but you've got a handful of stocks. Like there's like 5 or 8 or 10 stocks. NVIDIA, Apple, Google, Microsoft, Facebook, the FANG stocks, right? Netflix. They are, the index is weighted, right? So those, I can't remember if it's a market cap weight or not. They weight them different ways, right? Sometimes it's market cap, sometimes it's pricing. but I think it's a market cap weighting. So you take the biggest 10 stocks that have the market cap and they move the overall indexes. So while the SPX or the NASDAQ looks like it's going north, and it is, the index itself is, it's maybe only a handful or 5 or 10 or 15 stocks that are still going north. But when reality settles in and those big stocks turn south, the whole index then just collapses, because all the other smaller ones that don't have that much weighting, they're already weak, right? So that's why you have to be careful when you're looking at, the SPX or the Dow or the NASDAQ, that you say, oh, the market's going up. Well, is it though? And that's when you can look at breadth and say, okay, how much? There's 10,000 stocks. Well, if 9,800 of them are bearish and going south, and 200, which are the heaviest weighted stocks, are going north, then the overall market is going north, because those 200 stocks are weighted so heavily, it makes the market look like it's going north, while the vast majority of stocks are still going down. So you've got to take that into account. That's got to be a factor in your analysis and your thinking, that, okay, how many of these stocks are actually going north? Are they all just the big ones? And that's what we've seen a lot in the last year or two, which isn't necessarily a bad thing, but it can be deceptive. Okay. It can look like the market's doing really well when overall it's not, right? There's lots of different breadth indicators. You got the high-low index, right, that measures the number of stocks making new 52 weeks highs versus the new 52-week lows. I can't remember all of them out there off the top of my head, but there's lots of different breadth indicators where you can look and see, okay, the vast majority of stocks are going this direction, but then it's just these handful of stocks that are pushing things. So, Brenda, they are updated. 9:47. I just saw your note. It's actually streaming. It's just 15 minutes delayed. So this is accurate. Trying to look to see if I missed any tickers. I just saw one. Coin. We looked at the Qs already. You hit the lottery, especially where it is now. I don't even play it until it gets over 500 million. I mean, what's the point? Who can live on, less than 150 million? Let me say, okay, hopefully coin will come up here and this thing's going to be goofy, even though I'm a couple minutes late now. But lead input, if you want to jump on Weekly Whispers, you always have the 2-week trial, right? So you can get patterns of flash for 2 weeks. You can go in and take advantage of all the learning in there. If you got 2 weeks of vacation, go through it all. If you like it, keep it. If you don't, that's okay too. Weekly Whispers, this list right here you see on the left, the 33, those are all the ones that are on the list this week that I spent an hour last night. First of all, I go through the news. Right, we look at the overall news that's coming up. We look at last week's stuff, what happened, we review it real quick, and then look at the big picture. We'll look, like we did the SPX today. I talked about island reversals, and then I go through each of these. And well, you saw some of them. They have trading plans. Like, here's what I see. Here's my analysis. Here's what I would expect. Here's the trading plan based on that analysis. And then you pick and choose what you want, right? Oh, there we go. Finally. See, Brenda, it just updated. Did you see that? Whoops, banging that thing there. Yeah. Let me get rid of all this. You say 2 of O2? Where was that? Is that 2 of O2 or 2 of 22? Triple top. I'm not seeing any triple top, so I'm not sure what you're looking at. Maybe you're looking at something different than me. And charting is very subjective. So I don't know if you're talking about these 3 tops. Okay, February of 23. So this, yeah. So you're looking at these 3 tops. Yeah, I mean, there's quite a bit of distance. This is even stretching, calling a double top because of the distance between the tops. Right? If you have something that was 6 months ago, and then, if you said this and this was a double top, no. This is kind of stretching it, and having this much time in between it, I wouldn't consider it a triple top. Is it a resistance level? Yeah. And I can't remember. If you want to get super technical, there's a specific time frame. I can't remember what it is exactly. But if they're too far apart, then they're not considered a double or triple top. Does that make sense? So, but good. Yeah. I mean, if it hits there and stalls out and it does something like this again, I mean, there's a big dark cloud cover, right? And here you got the huge harami with a big shadow. So if it hits that level again and gives any kind of candlestick pattern or any kind of reversal, I would do that. I would jump all over it myself, but Brenda, I looked at the Qs, didn't I? It's the same as the NASDAQ, but yeah, I mean, it's a double top essentially. There it is. I thought we looked at this, but come on, what is going on here? There we go. Same thing as the NASDAQ. I mean, that's what it's doing right now. It's rallying as we speak. Will it keep up though is the question. Memory low. That shouldn't be the case. Yeah, so if it breaks above this level, then I'd maybe be bullish for a little bit, but not too long. Jennifer, I'm not sure. I just noticed your question. I don't know. I think it was just capacity. Asking why it went to once a quarter. I think it was just the amount of classes that we have going on. I don't remember honestly. So, and I try not to get involved in the back end stuff. So, ask support. They might have a good answer for you. I don't. So it wasn't something I did. It's what they do. So they just send me emails and say, when do you want to do this? Here's the dates you have for this. You can pick this date. And then I just say, okay, here's the dates that work for me. So what was there? Do I mention time frame in the videos? And then that's the last question. I'm going to shut up, Lee. What do you mean, Will, exactly? I'm not sure what you mean. Do you mention time frame in the videos? Oh, as far as inside patterns in a flash? Like the triple tops and stuff? Good question. It's been a long time since I recorded those. Which is one of the beauties of them, because patterns are patterns, right? They're always the same. So whether you're looking at some from 1930 or 1970 or yesterday, so I don't have to go back and re-record them all the time. But yeah, I'm not sure though. I don't remember if I talked about that or not. That's a good question. You know what? I'm going to make a note for myself. I'm going to dig into that and try to figure out what it is specifically, because I can't remember. There is a technical time frame. As far as where they're supposed to be, like the SPX is a little bit higher, one's a little bit higher. I know that's 5%. They should be within a 5% range of each other. So if a double top, if you get one a little higher, a little lower than the other, the technical part is that if it's within 5%, you can consider it a double top. But I used to dig into that stuff all the time. And it's like, now it's like, you know what, if it's close, I'm not going to calculate numbers and go, oh, it's 5.2%. That's too far out of range. I just don't do that anymore. I used to be that granular and that crazy about it, but now it's like, yeah, if it's close, I'm not worried about it. So. Good to know, Jennifer. I will definitely send that in and see what the deal is. I mean, I think it's just capacity. That's the only thing I can think of. It seems like I had a conversation several months ago about that, but I don't know, honestly. So, but I will definitely bring it up and ask about it. I'm not opposed to it. I mean, I'm good either way. I just have fun coming in here and doing this. So yeah, good to know, but appreciate the feedback. I really do, because that's the hard part is that, I beg people for feedback and a lot of times they just like ignore me. It's like, just tell me what you want. If you're in a Weekly Whispers, it's like, if I'm not doing something you want to see, then send a message and let me know. If there's something you like, I can't remember who it was, gave me some feedback, said they liked the review part. So I make sure that I do that part. If there's something that you feel like is a waste of time and you're not getting any benefit out of it, I don't want to share stuff that you're not benefiting from. So, I'm where I want to be with regard to knowledge and experience and all that stuff. So my only goal here is to help you get where you want to be, wherever that is. So. Yeah, exactly. Draw charts with your hand. Draw with a crayon, not a pencil. So appreciate that, Will. All right, I got to shut up. I'm now 10 minutes over. So thank you, Lee, for being patient with me, like always. I don't know when to shut up. I just have fun coming in here and playing. So I'd spend 3 hours here if we could, but we just don't have time. So, but again, appreciate the feedback, both good and bad. So appreciate y'all coming and hanging out and having some fun. And if you have, we'll see you the Patterns of Flash class or the Weekly Whispers, whichever one you get in, or both of them. So hopefully we'll see you there. Y'all have a wonderful week, and we will see you all very soon. God bless. Bye-bye.